My name is Macharia. I'm the CEO and founder of Abacus, which is an online provider of data for capital markets in Nairobi.
Joel, your first venture was PesaTalk.
Yes.
Tell us what happened there.
PesaTalk was a consumer finance news. It was aimed at helping people understand what was happening in the world of business. We liked to think of it as taking business news and turning it into English. It was funded by a local seed fund, 88 MPH, and it didn't quite work out because on my part, I didn't quite understand what the seed fund business was, where you take a small business, put in some money, get some metrics out of it, not necessarily revenue or profitability metrics, but metrics that make it look big enough to on-sell to another investor. While I was trying to build an actual business with revenues and profits and keeping it lean and growing slowly.
So after got to quite a lot of people, didn't you?
We did. We got to about 70,000 readers at our peak. We had a team of about 10 people. We had started to become the authority in simple business news. Still comprehensive, but very simple to understand.
So you
over
stopped
the course
that,
of 9, yes.
And what happened then?
So I stopped that after about 9 months of going back and forth, trying to find a midpoint on the deal, and which was in November of 2012. Traveled a little bit, traveled to the US, and then came back, and was still very tired of the technology space, and so left Nairobi, went up country and set up a poultry farm, and I ran that for about a year, all of 2013, experimenting, getting to understand agricultural value chains, and lived out of Nairobi. Made occasional trips into the city, but was primarily based in Nyeri.
So what drew you back?
PesaTalk had been the beginning of something. It was supposed to grow into a fully fledged online stock brokerage, enabling people to actually buy and sell shares. But starting off by building an audience that trusted us for having simplified business news. So when we came in and told them, okay, now we can sell you shares, they'd trust us. So this was still at the back of my mind, and I kept feeling that I hadn't finished. I just stopped, something, and I felt until I'd done it and tried it and put all my effort into it, I wasn't satisfied. I was never going to be satisfied. So after sitting back and thinking, after about a year living on a poultry farm in a very slow town, I felt rested enough to actually come back and try again.
So this led to your latest venture, Abacus.
Yes.
Tell me what Abacus is.
And I came back and started Abacus, which right now provides real-time data analytics tools, company profiles on companies and securities listed on the Nairobi Securities Exchange. So we're talking about bonds, shares, and derivatives that are being introduced very soon. We allow investors to make faster and smarter decisions into what to buy. We provide very comprehensive company profiles, provide data about these companies, and hopefully over the next 4 to 5 months should actually enable trading, so buying and selling of shares by working closely with local brokers and local banks.
So how will the money side work? How will people be assured that you're not going to run off with the money?
So trust has been one of the biggest things that we're looking to build, and the board is part of it. Openness with the business is another part of it. But on top of everything, just to make sure that people can trust that we're not going to shut down and close them and disappear with their money, everything we're doing is actually held in trust by a local bank that's regulated by the Central Bank of Kenya. Our partner bank is Chase Bank, and they will be holding cash and securities in trust, and we're working with a local stockbroker, initially Genghis Capital, who are licensed by the Capital Markets Authority.
And you've got local investors. Tell us about that.
So we've got local investors, angel investors, who have really helped with getting us to where we are today. Very well connected, and they come from a completely different industry from technology. It's one of the things that we're starting to see, with acquisitions by private equity firms of companies that are not in technology. The entrepreneurs who get acquired or who sell off substantial parts of their business then now channel this money into technology businesses. I guess it's a lot easier to fund a 5-person startup in tech than it is to try and build a new factory for a new startup.